You know something? Remember, there are no shortcuts, son. Quick buck artists come and go with every bull market, but the steady players make it through the bear markets. You're a part of something here, bud. The money you make for people creates science and research jobs.
Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, February 3rd, 2023. S&P 500 currently sitting at 4143. I'm David Zarling. I'm here with the Office NFL Pick'em champion, Ian McMillan. Undefeated, going for undefeated.
Yep.
With the Super Bowl pick for not this weekend, the following weekend. We haven't been on this podcast together for a little while.
Band is back together.
The band is back together.
I like we're the Blues Brothers.
Yeah, I mean, you don't know this,
Gotta
but
get the sunglasses.
Yeah, I'm wearing my fedora and black suit,
and
skinny
yeah,
tie.
you gotta get the hat.
Yeah, everybody visualize it. We look good.
Is that Belushi?
Yeah,
Yeah.
it is. It's Belushi. And are you going to let us know who you're going to take for the Super Bowl? I mean,
So my heart says you can't pick against the Chiefs. My brain says, I don't know, the Eagles will be tough.
I think it's going to be a great matchup. I know your house is divided.
We are. I haven't talked to my wife since Sunday.
So Kate's an Eagles fan. Ian's a Chiefs fan. I think it's going to be a great Super Bowl. You know, I hope I hope you guys have a jersey like that's half and half or something for Connor to wear. But it's going to be interesting to see what you pick for and maybe you only have one choice. I don't know. Because this was a loser pick'em pool meeting. Like,
yeah,
you
but
had to
then
pick
it
the
reset
losing
the
team.
playoffs somehow.
Oh, it did. Oh.
So yeah, I can pick either.
Okay. Wow. You have some decisions to make.
Or maybe I could also, but I haven't picked in either of them to lose. Like, maybe it didn't reset. It's just,
I don't think you pick either of them to lose all year, right?
yeah. So I never picked either of them to lose. So I hadn't used either as choices.
Yeah. I mean,
They're
it makes
both
sense.
available.
It's almost like relative strength. Like, why would you pick these really good teams to lose?
Exactly.
Yeah. And yeah, so Blues Brothers, I don't know if it's who's Belushi and who's Aykroyd, but I think I would take either one. And I think it's great having you back on here. I think we figured out it's been 3 or 4 weeks.
Has anything happened in the last 3 or 4? We've had a pretty good start to the year.
Yeah, really good start to the year. You know, we've got the Santa Claus rally that was the last 5 trading days and first 2 trading days of January. We have the first 5 days of January. Both of those periods were positive. We had January up 6.18% for the S&P 500.
We get the trifecta.
So you get the trifecta. And so seasonality wise, again, seasonality, not a predictive force, but it is something that if we look at the past and look at seasonality, when those 3 hit, it's a significant thing. And this is, you know, data that's been put out there by Yale Hirsch and now led forward by Jeffrey Hirsch at Almanac Trader. Ryan Dietrich has done some data on this too. But when you hit all 3 of these, S&P is up for the remainder of the year on average 17.5%, 90% of the time. That's a seasonal, that's going 1950 to through current.
Yeah. It bodes well for a strong 2023.
And that matches the 4-year cycle, presidency 4-year cycle, the mid-year. And we covered all these things at the Lunch and Learn.
We did
last week, but it is notable to see that trifecta hit. And it'll just be as notable if there's a cooling period. Like if we have a correction during this, that would be information and that's how we use seasonality. If it's supposed to be strong and it's not, that's when we sit up and take notice. But we really don't get to be surprised if 2023 is higher based on this information.
No.
Even with all the recession narrative out there.
Oh, lots of narratives for lots of big negative looming dark clouds out there.
For sure. And typically, it's been my experience in 22 years in markets and studying market history beyond that, that when the narrative is everybody's aware of it, that's not typically how this works. It's not like everybody knows there's a recession and therefore the market is going to correct. It's typically when everybody's on the wrong side of the boat on this.
Well, and I think you've got a lot of people that are frustrated that the market has, and we were up how much in January?
6.18% using the S&P 500.
Yeah.
So that can be frustrated if you were positioned too far the other way. And we're going to get into this as we roll out this show, but there's definitely some things to take note of from a bullish thesis standpoint or an uptrending standpoint. But there's also some things that are worth paying attention to that are potentially a warning sign for the other side. I think an example of that would be, while we've risen straight up into 4180, we can start there on the S&P. I feel like we could put a pretty lengthy sound clip together from the past 6 months or
how much
longer.
We've talked about this level. Yeah.
4180 is extremely huge. And it's not just a random number we picked out of the sky like a spy balloon. It has to go to that consolidation that took place in June of 2022 in the S&P. That really was confirmation and we sold off from that consolidation below 4180 in June. That was confirmation that a downtrend was in place now. It's not like we knew a market correction was happening in January. Yes, underneath the surface, since February of 21, there has been in the majority of stocks. But as far as the major indices, that's really January of 22. But you don't sit there and know that it's a top in real time. It's really not until June of 22 where you see this consolidation take place under 4180, where it's apparent that supply has control over demand.
Mm-hmm.
And we've just gotten back to that level this week rather quickly. And so 4180 remains important. We're going to see what happens here.
It is. I think I could see us, we're below or above these November highs at, I'm going to call it like 4080.
Yep, that's another level we've talked about, 4080.
Do we, I think the healthiest, right? And of course, for bulls, you'd always rather have a sideways consolidation versus a throwback in price. I don't really want to come back to, we still have a downward sloping 200-day trying to flatten itself out. I mean, that's going to take some more time. So if you stayed here between 4080 and 4180, is that healthy?
I think so. Right. If you stay between this, if you consolidate here, let the 200-day flatten out and catch up, that's probably a positive development.
Now, when I look at the Dow, really continuing to struggle with this 34,000 level.
Yeah, that is true.
Maybe this is just a consolidation underneath this. That's totally possible. But again, this was a big level we talked about at the Lunch and Learn. 34,000 on the Dow really needs to be obtained and held. It's
an interesting scenario. Last week I covered just some of the breadth expansion that we're seeing. We talked about that, 2 to 3 weeks ago as well, including breakaway momentum. And those are positive dynamics. But somewhat related to that is this move that we've seen basically in the past few weeks. Goldman Sachs has a liquid most shorted index. The most shorted things have moved up pretty significantly. Yeah, the most.
Yeah, that has definitely been a character. A lot of the things that were trashed last year have been the biggest winners here. I mean, we're a month into the year, but a lot of these names up 30. I mean, how much is, I think it's in Tesla up like some ridiculous amount in 2023.
Yeah, that would be a great example that Tesla was in a downtrend going back to November of 21, and it's one of the best performers to start the year, up about 76%. And so you have some of the worst things from 21, like you're saying, being some of the best performers to start. And there's a couple different ways to look at that. And if we go back and look at September and October 2022, we had record levels of put buying, or I should say record levels of a put call ratio.
Okay.
There's two numbers there. It doesn't have to just be buying puts. It also could be a lack of call buying. But in that
Very
scenario, it was a record level. And so when you have the market move against you, you become a buyer. If you're a put buyer and the position goes against you, you have to cover, which makes you a buyer to the long side, which I think we have to be open to the idea that year to date, that some of that has taken place, that we're watching what's called a short squeeze take place, which obviously wouldn't hurt breath. If you have record levels of a put call ratio and you get squeezed and you have to cover, that's a plausible thesis.
Yeah, it's a lot of balloons being held under the water that need to pop.
Right. Now, that doesn't mean we can't move higher. That's not what I'm saying. There is a lot of positive breadth development. And when we do look underneath the surface as far as what's performed since October, which we now know as a important low, to be determined if it's the low, although the further we go along in an upside, the more likely that looks. The best performers since then, though, are things that are risk on. It's not your staples and your utilities, your risk off areas. It is things that are risk on. So it's going to be really interesting to see. And we've said 4180 over and over and over until we reclaim that and sustain trade above that. I think that gives a little bit more of there's never an all clear in markets. There's no such thing, but a little bit easier. And so we're right up against the August highs in a lot of places, with the exception of the S&P is not, nor is the Qs, or nor some of the big cap, Apple and Google. But small caps, they're there.
Yeah, and you've got even right, and industrials as a whole, they're there.
Yeah. Very good point. They're above their August highs.
Yeah, IWM is real close. Also 2000. Obviously, the NASDAQ probably the furthest away. I would say the NASDAQ still has the most work to do. I mean, it's got a broken rate of trend from last November, December, but
when you bring up a good point, I mean, are things really that bad if the first things to clear their August highs are semiconductors, trucking, industrials, home builders, and things that go in your home?
Yeah, those are some I'm glad you brought up home builders. That's a great example of an area that you would want to see, a risk on area that you would want to see outperforming. And it certainly is. Transports. Yep.
When I remember when we kind of noticed this taking place, unfold over the last week or so, maybe a little bit more, that these are the first areas clearing their, and the reason why we bring up August is that's an important pivot or high in many different indices, whether it's a sector or broad indice or even an individual stock. You could probably look at them and notice selling that happened in August of 22. So these are the first areas over, and dare I say, it reminds us a little bit. I bet if people went and listened to the episodes from April through June of 2020, they would be hearing some of the same things. Trucking, semiconductors, home builders, things that go in your home. Like, how bad are things if those are the areas that are leading?
Yeah. And you're saying what time period was that?
That would have been coming out of the COVID crash.
Yeah. April, yeah.
April, May, June of that year. Those were the areas.
And that was a pretty, they had some big days in there, but I mean, a pretty strong uptrend getting out of there really through the end of August.
Yeah. And those were the areas that led. And it matches when we see breakaway momentum as well.
Mm-hmm.
That took place back at that time frame. So do we get to be surprised if you have breakaway momentum, increased participation, these other risk on areas leading, that we're not seeing stocks higher 6 to 12 months from now? And the bear market, which has really taken 2 years, is over. I don't think we get to be surprised, right? It's February 21. We're now in February of 2023. I have no idea.
Well, and we talk about the average stock, and right, I would say the bear market you are describing is most easily visualized on something like the NYSE composite, or if you take value line geometric. And both of those indices are above their August highs.
Yeah.
So the average stock, we talked right before we got on here, micro caps, close to breaking out of a relative base. And this is exactly what happened in November 2020.
Very good point. And that was a rip roaring time.
It was. And if a micro caps are gonna start outperforming, now could that mean yes, that mega cap tech is going to absolutely fall off a cliff? It could, right? And maybe microcaps outperform to the downside.
Or maybe maybe on an absolute basis, they just move sideways.
But so then that's going to bring me back to Apple.
Yeah, the big boy.
And I think Apple has kind of, and this is a chart we watched for a lot in 2022.
Mm-hmm.
Horrible relative strength from Apple. Bears had Bears had a lot of chances to take this lower, kind of tried to in December, but Apple is made such a move lately and is back to on its chart where can't hold that one down.
Yeah, if Apple's not going to move down, if it can stabilize.
Microsoft above its, as of yesterday. Oh, it's not above its August highs. I take that back.
Well, the interesting thing about Apple is just where it found support near the daily volume weighted average price from the COVID low. And it's now up against its daily volume weighted average price from its all-time high. So going to be really interesting to see if Apple can sustain trade. I'll call it above 143 to start, but it's at 155 currently. Around this level or move higher, going to be really hard for the market to, if we continue to see this expansion. And this goes back to like the bigger picture of you have all these shorts getting cleared out, undoubtedly, right? If you were caught on the other side, we talk about all the time, yes, we're not necessarily long some of these places, but we're sure happy we're not short them anymore. Because some of these, some of the FANG names we were short, not this year, but some of those places are ripping.
On and off throughout 2022.
Right. And it could just be a killer if those were areas that you were holding a short and just ripping against your face at the start of this year. Typically, if you're going to see a correction unfold in a substantial manner, the dangerous part of the correction actually happens once the shorts are cleared out. So I'll be really interested. You could have a positive 23 that clears out, like who in their right mind is going to try to short again because it hurt them so bad that maybe in 24 you have some really massive divergences in place. But we'll worry about 24 when we get there.
2024 also lines up a few other.
Yeah, panic cycle.
Yeah.
So we'll see. I mean, you could see an environment where, so you look at the Apple chart on an absolute basis, right? It's high. Its all-time high was around, if I'm looking at this correctly, around 182. We're currently at 155. Could we get back up to 182? Absolutely. Could it reach 182 while the market's actually higher? Like much higher, we're breaking above 4180 on S&P, or we're, small caps or micro caps are doing very well and reaching their all-time highs? Absolutely. And you'd have this pretty large divergence taking place in one of the largest stocks on the planet. But we'll see. We'll let 2024 take place when it takes place. In 2023, the things seem to be lining up. Ian, seasonality, both from a January and the trifecta to the third year of a presidential cycle. And we're seeing risk on areas of the market do well. What else are we seeing from a relative strength standpoint, strength and weakness that stick out to you?
Materials.
Yeah.
Most areas, when I look at, small cap versus large cap, like if I look at small cap tech versus XLK, we want to be in small cap tech.
So you're using, like, as an example, you're using PSCM versus XLB.
Yep.
Okay. And that's very obvious. Even versus S&P, PSCM.
Industrials. I mean, look at PSCI versus XLI.
That's absolutely true.
That's a huge.
Well, that goes back to
validation to be potentially moving out of.
We could just be getting started. And this goes back to your comment about micro caps and where they broke out in November of 2020. And you're seeing all these small caps on a relative basis break higher against large caps. That could be the story of the week, that we're just getting started in some of these things from a broad participation perspective.
Absolutely.
I
think a lot of these material names, and you had mentioned home builders earlier, and not just home builders, right? What goes inside the home? All the industrial, we know it because we are in here, right? We kind of run this same core. We look at this, when you look at the same things day after day, month after month, literally year after year, it just becomes more intuitively obvious when you go through, when you run a double scan. Software has been really strong. So you see these, I would say regional, banks have been surprisingly, if you look at, I think I was looking at financials earlier. Financials holding up there on a relative basis.
Well, and it has cleared its August high, XLF.
There you go. Yeah.
As an example. And so you have all these positive developments. The one that really catches my eye, at least for the last month or so, is just European financials have had quite a run, and they're well above their August high. And
and then, you look at something like that, and it's used a lot of energy.
Yeah, it's one thing to take notice. It's another thing to say, is this where we're getting long European financials? That's not really what I'm saying. That it's not like, is this where we put new money to work? Because we should always be asking ourselves that question. But it has been a leader. It's worth taking note of. And if it's going to continue to be a leader, there'll be plenty of time to take advantage of that.
Agree. I absolutely agree. Those things have been so beaten down the last 10 years.
And we continue to see, it's interesting over the last week, right? On last week's podcast, I just brought up how much earnings reporting there was this week, and it didn't matter the earnings. It just mattered the response to earnings. And you saw a pretty big move out of some of the bigger cap tech, or some of the most beaten down, like Facebook, over the last week. Yet you have something like XES still consolidating, XES representing oil and gas equipment. So not the best performer year to date. The beaten down areas are, but here you have an area that's pretty high beta. And when it leads the energy space, it tends to be good for energy overall, sitting above 82.60 and consolidating. It's not like the energy thing is over.
No, not at all.
And that goes back to value, the value trade. Now, this is a sticky conversation, right? Because we pointed this out at the Lunch and Learn as well, that some of this energy stuff is being thrown into growth indexes.
Yeah. SPYG now 8% energy, SPYV now I think 1% energy. And they basically flip the weightings there, which is interesting.
Well, part of that metric is momentum, right?
It is. I think a third of it is based on momentum, which is also not. I love momentum.
We love.
I don't know if that changes my opinion on whether energy is growth or value. But
agreed. I just make the argument, when value has momentum, that's when you should own it.
Yeah.
Like, let's not try to make this harder than it already is. But you got mid cap value moving out to all-time highs again.
And then mid, and it's been there for a bit.
Right. Whereas like your mega cap value has not made it to new highs and is sitting around the August highs. And then when you look at small cap value, it's just reaching its August highs. So there is some style box things going on here where that mid cap area is doing better. And you could even argue on a growth basis too, your mid cap growth tends to be a little bit better than your small cap.
Yes. Agree.
So in that relationship, if we use something like RFG versus IWO, I'll be careful because it's underperformed that recently and we're at an important horizontal level now. But it is worth paying attention to where that strength is coming from. Where else? You mentioned materials, industrials. I think we talked semiconductors just a little bit.
What about, okay, so now this is a little bit more shorter term, but the last couple days, and this is all occurring at a interesting spot, getting kind of a big bounce out of the dollar.
Yeah. The trade weighted dollar for sure, at which
we are still below 104, which is kind of the level we have harped on a lot.
But I would say the 101 to 104 area is something you could go back through the podcast, and if you just did a search for DXY, you'd hear us talk about this level. This is not really a surprising level if we were to see the dollar move higher from here.
And dollar still never got oversold on RSI.
Right. I was just going to say that. Never got oversold. If we had a unique situation that Dan noticed earlier this week where you had, it might have been actually just yesterday, VIX up, dollar up, and you had this big rip higher in some of these large cap tech names, which could signal that closing of shorts and short covering squeeze.
Mm-hmm.
So it's a really interesting point in time to see the dollar do this. Do we see stocks pause because they move so quickly? Right, we're talking about off the October low about 18%.
Yeah,
using something like the S&P, and that's been pretty quick. And so it's TBD until we're above 4180 and sustaining trade above there and something like the S&P. There's still some potential issues. Now you could have a scenario where micro caps and small caps and mid caps are moving higher while these big cap names struggle. That environment has happened in the past. 03 to 07, similar to that, not opposed to it. You mentioned banks, that would fit that. Foreign would fit that theme. And so we'll see. Only time will tell. Anything else we should be touching base on, whether it's domestic, international, sector, sub-industry?
So I'll throw out a happening domestically. Pretty important to us, pretty important to our clients. The ADPV ETF.
That's right.
Did flip long on Monday at the open, as per the strategy. So it is now it's been fully invested. It's fully invested in stocks. It was in T-bills before. And for more information on that, I would say that you can visit the adpvetf.com website.
Yep, absolutely. That is a very important development to highlight. Rules-based, objective approach. It has flipped long on Monday. Like Ian said, you can go to that website, adpvetf.com, to look at what it's holding. But definitely a important development.
Pretty excited, yeah.
As much as we love, T-bills are important, especially when the market is in a capital preservation characteristic, meaning in a downtrend. But for all intents and purposes, it's marked not such. And so now it holds stocks, and that's exciting. And it's also exciting to see it's not just a static. It just doesn't own 25 stocks and sit there.
Yeah.
There's a ongoing process, and there'll be potentially new positions on Monday, but we really can't talk about that. But it's exciting. It's exciting to see it go live, and we think it's a great solution for our clients.
Yeah, it's active transparent. So, you can go to the website every day and look at the updated holdings and weightings.
Yep. Pretty awesome. So I think that's a great update. I would say beyond that, I know we didn't spend a lot of time. We didn't necessarily talk about bonds or commodities. Anything we want to touch base on there?
TLT, still consolidating. Rates really haven't, you look at 30-year treasury yields. We're still above this 3.4. Kind of looks like building energy for, another leg higher. So I would, going to be hard for TLT to do much to the upside if rates aren't going to roll over.
Yeah, that's true. So we've had a big move in stocks, both to start the year and from a important bottom in October. We've seen breadth continue to be a positive development. And now it's a matter of, is this just beyond a short squeeze, which we're going to find out. Confirmation of that would be sustained trade above 4180 on the S&P. By no means are we out of the woods. We could roll back over. ETF, for example, could go back into T-bills. Perfectly fine with that. You just stay disciplined to the system. But we've seen some positive developments, and it would be great to see those continue and match the seasonality that's currently set up for this current year. People always like it when markets go up.
Makes everyone feel better.
Yeah, makes everybody
I want
feel
markets to go up. I'm just, as two dudes who manage risk, I got to also accept that isn't how the world works.
Right. Markets don't always go up. There can always be more down. And so we'll keep an eye on these different scenarios, whether it's with stocks or bonds or commodities. There's really not much to talk to from the commodity side. Some strength out of some of the gold areas, but if you look at them on a relative basis, like gold miners, not necessarily something to write home about. Not much to talk about from crypto. Yes, we've seen some appreciation there. You've got Bitcoin 23,400. This is a pretty important level that goes back to last, also an area that's gotten back to its August high in 2022. There's that level again. August of 2022 is the first important mile marker. You can't get to all-time highs until you pass that one first.
Yeah. I hear a lot of people saying we're like getting to blue sky territory for stocks, and I just don't agree with that.
Some areas,
but as far as stocks as a whole,
like a blanket statement, pretty hard.
Yeah.
I would agree with that.
Got to be at all-time highs. You got to be in truly blue skies to earn that designation.
Well, and there's going to be some, it's interesting, right? Because you go back 1 year at an indice level, that's where a lot of indices had their prior highs. You go back 2 years, that's where the majority of stocks had their all-time high. So your 52-week data, like your new 52-week highs, of course, that's going to be looking pretty good as we move forward in time, past some of these mile markers from the past. And that's okay. That's how that data works. It's not like there's some uniqueness to this period of time. The 52-week high list, it's just going to continue to increase as we move forward in time, assuming we keep these levels.
Mm-hmm.
So we'll see. As always, Bayesian approach, take the data as it comes. I don't really have anything else that we could necessarily cover, Ian, but that doesn't mean there's not anything else you want to touch base on before we close it down.
Nope, that's it for me.
Okay, awesome. Well, enjoy your rest week before the Super Bowl week.
Yeah, well, we're going to be in Miami.
Yeah, we're going to be in Miami for the Exchange ETF conference.
Sunday afternoon.
That's right. And if there's any advisors out there that are going to be there, make sure you hit us up.
Yeah, please come find us. We will be there. We look like we do on our Twitter profiles. Well, Dave does not look like George Washington.
Well, I switched mine.
Oh, you did switch it?
I did, but I might switch it back. The dollar is at a bullish engulfing on a weekly basis. It could be dollar strength time, so I might switch it back. So and the euro, Ian's correct. I don't look like
rolling over with a divergence.
And that could be, that little nugget right there could be a signal for the month or so to go or ahead. We're going to see dollar strength that typically has meant stock weakness, especially as we bump up against 4180 on the S&P 500. But yes, if you're an advisor down there, I don't look like a green George Washington, but my profile is current right now. We'd love to get together. We could talk ADPV, football, you name it. We'll shoot on anything. So looking forward to that, Ian. We'll see you down there. Everybody else that listened, we really appreciate it. As always, I'm going to request that you share this, give us a high ranking. It does really help us. We put these out for free. We think it's tremendous information. Otherwise, Ian, I'll let you sign off.
Have a great weekend, everyone.